So remember the question is May 2017. May 2017. For those of you who have just joined us, question number 1B. Question number 1B, it's advanced financial management. It's advanced financial management. So what do we have here? They want us Roman 1 to give them the breakpoint. So what we shall do is to calculate the breakpoint of equity first. The breakpoint of equity, ladies and gentlemen, to get breakpoint of equity, what I need to do is to remember the formula. But the breakpoint of equity will be equal to the maximum equity amount. Maximum equity amount all over the weight of equity. So you take the maximum equity amount all over the weight of what here? Equity. Quite simple. It's just a ratio. It's just a quotient where you take the maximum equity amount divided by the weight of equity. I've got no problem with the weight of equity whatsoever. The weight of equity has been defined for us. They have given us the weight of equity as 55%. They have given us the weight of equity as 55%, which is the same as 0.55 like that. Weight of equity is 0.55. How about equity amounts? Remember, equity is divided into two. Equity has got two components. Under equity, ladies and gentlemen, we have retained earnings. Under equity, we have retained earnings. And then we have what we call the ordinary share capital. Under equity, we have retained earnings. And then we have the ordinary share capital. So what we need to do for us to be able, ladies and gentlemen, to compute the breakpoints of equity properly, first of all, we have to tell how much do we have coming from retained earnings? How much do we have coming from retained earnings? Now remember, in this particular paragraph, ladies and gentlemen, they have told us the management of Kenzel Limited forecast, the second paragraph that is, the management of Kenzel forecasts the after-tax earnings for the forthcoming year to be 2.5 million. So the profit after tax is 2.5 million. And the company has been paying 60% of its earnings as dividend. And this payment ratio is expected to continue into the foreseeable future. So meaning into the foreseeable future, they'll continue paying 60% and therefore retaining 40%. So therefore the retained earnings will be 40% of the profit that these guys make. So can somebody give me, what is this 40% of 2.5 million? So 40% times 2.5 million. 40% of 2.5 million, that must be a million, if I'm not wrong. That must be 1 million. That must be 1 million. That must be 1 million. So 1 million like that. 1 million like that. So 1 million retained earnings equals 1 million. Thank you very much. Now, I would want you to do me a favor, then give me the first breakpoint of equity, which will go together with these retained earnings. So come and give me the breakpoint, the first breakpoint of equity. The first breakpoint of equity, which will be the breakpoint of retained earnings. Into brackets here, retained earnings. So therefore, from this equity component, I can only get a million. From retained earnings, I can only get a million. So 1 million divided by the weight of equity. The weight of equity, ladies and gentlemen, the weight of equity here, you are the guys who gave me a figure of 0.55. You are the guys who gave me a figure of 0.55. A figure of 0.55. So could you kindly take 1 million divided by 0.55? What will we get? 1 million divided by 0.55. What shall we get? 1 million divided by 0.55. What shall we get? Breakpoint of equity. Fortunately, I happen to be having great students. Great students. Breakpoint of equity, ladies and gentlemen, what do we have there? Breakpoint of equity. The first breakpoint. Somebody called Maria Francisca. They're giving me 1818. So we have here 1818, 182 Kenya shillings. 1818, 182 Kenya shillings. 1818, 182 Kenya shillings. Thank you and thank you very much. That is the first break point. From there, ladies and gentlemen, we look for the second break point of equity component known as ordinary shares. So we have here break point 2 for ordinary share capital. For ordinary share capital. So what you need to do, ladies and gentlemen, for ordinary share capital, what you need to do is to come and look for information that is talking about ordinary shares, which happens to be the third paragraph. The third paragraph after this table of loan amount. We are told the company's corporate tax rate is 30%, that paragraph starting with 30% tax rate. The current market price of equity shares of the company is 22. The last dividend on equity shares was paid at 2.2. And the expected growth rate is 5%. New equity shares can be sold at a flotation cost of 10% of the issue price. So, ladies and gentlemen, there is nowhere where they are telling us how much we expect to raise out of ordinary shares being issued. They haven't specified. And remember, for us to be able to get breakpoint, we need, ladies and gentlemen, this maximum equity amount. So they haven't given us the maximum. They haven't specified the maximum amount. They haven't. So if they have not specified the maximum amount, ladies and gentlemen, then automatically it means that we shall come and write here that there is no limit. There is no limit, and therefore there is no breakpoint. And therefore there is no breakpoint. So there is no limit, and therefore there is no breakpoint. There is no limit, and therefore there is no breakpoint. So, you know, we have to be very good at this. Once we are very good at these things, when we go to the Modigliani and every other thing, they will really flow. They will flow. This is the benchmark. This is the bedrock of this particular topic. So here we don't have, ladies and gentlemen, any specified amount to be received from ordinary shares. So we don't have the ceiling. And therefore, there is no way we can talk of what here, any breakpoint under these ordinary shares. In short, our breakpoint here is undefined. Our breakpoint is infinity. Our breakpoint is infinity. So Maria wants us to repeat here. Remember, in most cases, the examiner will tell you that if we issue ordinary shares, we are going to get like 10 million Kenya shillings. In this case here, they have not specified the amount. And whenever the amount from a particular source of finance has not been specified, then there is no way you'll be able to compute the breakpoint. Because what will you put in your numerator here, now here? Nothing. So I hope, Maria, that helps. I hope, Maria, that helps. Now, ladies and gentlemen, if you allow me, then that means that the moment I've been able to reach this end, I need to straight away jump to the next vehicle of finance. And the next vehicle of finance, ladies and gentlemen, is debt. So right there for us, breakpoint of debt. Right there for us, breakpoint of debt. How do we get the breakpoint of debt? How do we get the breakpoint of debt? To get the breakpoint of debt, ladies and gentlemen, this is how we normally do it. The breakpoint of debt, the breakpoint of debt, the breakpoint of debt will be equal to the maximum debt amount. Maximum debt amount all over the weight of debt. Maximum debt amount all over the weight of debt. Maximum debt amount all over the weight of debt. So I can see I have got 3 debt instruments there. I've got 3 debt instruments there. I've got 3 debt instruments there. Ladies and gentlemen, the debt instruments which I have here, I can see from the second table under loan instruments, loan amounts, I can see I have 9% debt instrument, 11% debt instrument, 13% debt instrument. So ladies and gentlemen, I'll have to calculate 3 breakpoints then. So we'll have to start with the breakpoint 1 for 9% debt. So for the 9% debt, are you able to see the maximum debt amount we can raise out of this? Oh yes, I can see the maximum amount that I can raise out of issuing this 9% bond is 500,000. So I'll talk of 500,000. We divide this by the weight of debt, which you guys had given me from part 1, or rather from that particular table, which the first table which is given in this question. The first table given in this question, ladies and gentlemen, these people had given us on this table, you can see that the weight of debt is 45%. The weight of debt is 45%. So weight of debt is 45%. So come and divide this by 0.45. So it is 500,000 divided by 0.45. Please give me a figure. Give me a figure. Remember, I promised all of us by some time, right? By some time, our class will be ending. So Rosaline, these guys are able to give me 1 as the first break point, which takes me to the next break point, which is break point 2 for 11%. So for 11% break point 2, what are you able to see there? For break point 2, 11%, what are we able to get, ladies and gentlemen, for break point 2? For break point 2, 11%, what are we able to get, ladies and gentlemen? So for breakpoint 2, 11%, I can see outrightly the range. I can see the range here is 500,000 all the way to 900,000, all the way to 900,000, all the way to 900,000, right? So here I may be tempted to subtract the 2, and that is the biggest mistake that you can ever do in this kind of arithmetic. Because remember that these breakpoints are supposed to be cumulative in nature, and that is why we'll simply come and read the maximum value, maximum, the upper limit. So the upper limit here is 900,000. We divide this by the same weight there. So what is 900,000 divided by 0.45? 900,000 divided by 0.45, that will give me what figure, ladies and gentlemen? 2 million, thank you and thank you very much. So 2 million, thank you and thank you very much. 2 million, thank you and thank you very much. Now I would want a good student to take me to the third breakpoint. Take me to the third breakpoint. So in the third breakpoint, what do we have here in the third breakpoint? So breakpoint 3, the third breakpoint. So in the third breakpoint, ladies and gentlemen, I would want a good student. You know, the third breakpoint runs from 900,000 and above. Above really means that we don't have an end. We're not going to break anymore. So above means that we don't have the ceiling. The ceiling has not been given. So this will be the same as saying infinity all over 0.45. But the very best thing is to say what Raymond and George have told us. No maximum given, and therefore it's infinite. No maximum, therefore there's no break point. If you are a good follower of these videos outside there, movies, I mean, there must be that movie which you watched long time ago when you were kids. That there's no retreat, no surrender. No retreat, no surrender. No retreat, no surrender. So in this case here, breakpoint 3 is infinity. Breakpoint 3 is infinity. Thank you and thank you very much. Now, ladies and gentlemen, I would want us straight away to go to the next thing, which is Roman 2.